Good morning, everyone. Welcome back to Morning Markets from the team at True Potential, where we look back at and reflect on some of the key moves in asset markets. Today, we'll just look at the performance of last week and think about what we've got the week ahead. So, last week we ended the week on Friday with another positive day in equity markets across the globe, really, taking returns from the equity asset classes up a couple of percent over the week. So if we look at some just regional markets and what was delivered there, in Asia we had South Korea up about 3.7% over the course of the week. In the UK we had the main index here up about 3% on the week, one of the stronger performances through Europe, and that's despite the strength that we've seen in sterling over the course of the week. And then just turning to the US, we had the Nasdaq up about 2.2% and the S&P up some 1.7% on the week. So good performances there. In bond markets and sovereign bond markets, you'll remember back to the middle of last week where we talked about the material move that we saw in yields backing up and taking the 10-year very close to that 1% level. So a slightly weaker performance for bond markets. Remember, as yields increase there, prices are falling. One of the other things that we did mention and have been mentioning over the past number of weeks is the employment situation in the US. And we had the non-farm payrolls number on Friday, which continued to build on that sort of variable picture that we have for employment trends. So we saw some 245,000 jobs created. But to put that in some context, that compares to 610,000 that we saw in October. And expectations for November had been around some 450 to 470,000 jobs. So a bit of a disappointing number there. And that speaks to the challenges that we've been seeing in the US over the past month, but also why there is this real need for the fiscal support package to be announced, particularly for the jobs area when some of those incentives roll off at the end of this month. And that's probably why I think we saw the reaction that we did in the bond market on Friday. Probably we would normally have expected bonds to have increased in price on Friday in the back of that disappointing data, and then for yields to have moved in slightly. That wasn't the case, so maybe a bit of market participants looking through that disappointment and thinking about, well, that will mean that there will be more fiscal support on its way. Currency markets really on Friday, again, very much this story of the whole week of sterling strengthening, particularly against the dollar. So large part of this is dollar weakness coming through. But again, sterling being influenced because of the news flow around the Brexit trade discussions, which continues to offer something for everyone. So again, I think they're re-meeting today in Brussels, and we'll see where that gets us to, and we'll continue to reflect and bring you that information as we see it. Turning to the week ahead, quite an important week for the European Central Bank. We've heard over the past number of probably weeks, probably 6 to 8 weeks really, of how the December meeting will be one at which the ECB provide additional support to the Eurozone economy. So it's been very well flagged. So I suppose the thing there is that we need to see that coming through. We need to see about the size of the additional pandemic support package that they're going to put in place, how it's going to be targeted, and its time frame of which it's going to be applicable. So quite an important week for the ECB and Eurozone assets. Looking then just across other regions, in the US we'll have some inflation data coming, which again is probably not going to get us anywhere close to the 2% target that the Fed are discussing. But again, it's the trend that we're seeing. It's important for us to have a look at there. In the UK, we have a number of data points, including GDP and industrial production, alongside the Halifax House Price Survey, and a bit like the US, housing in the UK, prices-wise, has been relatively robust over the past number of months. So we'll see if that continues. In Asia, then, we have a number of data points on the Japanese economy, and we'll see how that reports in terms of GDP, inflation. And then in China, we've got credit data. Just this morning, we've had exceptionally strong data from China, particularly if we look at in terms of the exports. Exports from China increased 21.1% year on year. And that's an acceleration and a meaningful acceleration from the level in October, where we had 11.4% growth in exports. So broad-based strength within Chinese exports. Contrast, imports probably not as strong as had been expected, increasing 4.5% year on year, and that compares to the 4.7% that we saw in October. I'll leave it there for today. Please do subscribe on our YouTube channel, and I look forward to speaking to you over the course of the week. Thank you.
Thanks for watching. If you enjoyed this video, please leave a like and don't forget to subscribe to the True Potential YouTube channel. If you have any questions or requests for future videos, let us know in the comments.